Everybody, it's Brian Shannon from alphatrends.net. Today's Friday, the 14th of September, 2018. I hope you had a good week of trading. Just realized I put the wrong date up there, so just ignore that. But the point is, this week we had a constructive market action. The biotechs lagged a little bit, as did the financials and the bonds, but overall a positive week for stocks. And when we look at the S&P 500, starting here with a 30-minute time frame, meaning each candle represents 30 minutes worth of trading. We went back to mid-August, and you can see that we were, as I was talking about throughout the week on Twitter, I was pointing each day about that, the volume weighted average price from this low was going to be important. Not only was it because it was that volume weighted average price, but it was also the 38.2% retracement of this move. So from this low to that high, 38.2%, you can see designated right over here, is where we found support. Now, when we had the declining 5-day moving average, we weren't able to trust the market yet, and further, we were below the volume weighted average price from the peak. So what does that mean? It means that the volume weighted average price off these lows, people use that as a reason to average into their long positions, whereas the sellers who were present in this decline over the last week and a half kind of started to undergo this transitory period. They realized there were more buyers in there, so they stopped selling as aggressively. It gapped up to the declining 5-day moving average. The sellers took advantage of that. But then we started to see the real transition where the buyers were able to close the market above that volume weighted average price off the peak 2 days in a row. So what that represents to us in terms of psychology is that the average participant since that peak, the dollar cost averager or just the average down person, is now in a winning position where they're feeling better about that. And then when we see a gap higher like we did on Thursday, it really cements that. Now we have, as I mentioned, a volume weighted average price level that we're going to start to monitor more carefully based off of this pullback low that came into this prior volume weighted average price in the 38.2% retracement. We also have a rising 5-day moving average, and we're above the average price paid since the last time the market made a new all-time high, and it appears as though this market should be able to continue to make new all-time highs. We have a perfect pattern here really recently of higher highs and higher lows. This is the most recent relevant higher low, and if you want to measure your risk against that, that's fine. I prefer to say what's the volume weighted average price since that low was made, and that allows me to keep a tighter stop up near about 289 rather than down near 287. Always do what's right for you in your time frame, but that's how I look at it. For the NASDAQ, we had a similar type of situation where we saw this prior rally pulled back to the rising 50-day moving average in this trend line that we've referenced. And then on the 30-minute time frame in this case, we saw a little bit more hesitancy for the buyers to really regain that control. So the volume weighted average price from the mid-August low and the volume weighted average price from the late August high. We see that trapped this market until Thursday. Today we came down and tested that level. That's a good thing. Now we held above that level, so that, as I said, is a positive. We have right now the average price from this peak and from this low kind of tied together in at about 182.5. That is also where we find the volume weighted average price from this low. So when we look at these two VWAPs together, that tells me next week we want to see it hold above that level. If we pull back below that level, I will most likely reduce ownership of NASDAQ. The Russell 2000, we're seeing the same kind of transition here, but it's taking, again, a little bit longer. That volume weighted average price, we did not hold, but when we got back above the 5-day moving average and the 5-day moving average flattened out, we also took out the volume weighted average price off that peak. We got this little pullback today and closed above it. So now I'm looking at the most important level for this market to hold near term next week is about 170.20. If it can hold above that, I think your bias is to the upside on the intermediate term time frame. Long term, of course, still powerful long-term uptrend, but from an intermediate term bias, if it got below 170.20-ish, then I would think you would start to kind of reconsider. Semiconductors, they did have a positive week, but it wasn't very smooth. We had two big gaps lower on Tuesday and Wednesday, and then they really did a good job of recovering. But when we look at where that puts us in the overall context of the daily time frame, we've had this bigger band of support over the last couple months down near 101 and 102, and this band of resistance up in here. Now we're back to the middle point. We're near the rising 20 and 50-day moving average. I look at this market as range bound on the daily time frame, and if you like being frustrated with gaps and big moves in either direction, at least be aware that you don't want to be a buyer when the 5-day moving average is declining. Maybe you bought in here and got lucky, but that's not where the odds are. To me, it's about trading with the odds. The biotechs, as I mentioned, they're a little bit more, they were down a little bit this week. They're hanging right on this 50-day moving average. And, the magnitude of the sell-off versus the rally has me a little bit concerned. Now, it's not bearish, not yet, but if we take a look, we could even, say here's the volume weighted average price from that August low. We're finding sellers at that level. We're still below the volume weighted average price from the peak. The 5-day moving average is starting to flatten out. I think next week, if the buyers are going to regain control and it's something that we can trust, we want to see it above 119. But it's not just getting above there. We don't want to chase it. We'd rather see it kind of do something like this, and then maybe pull back a little bit, create a higher low in this area, and then be a buyer of a breakout with a stop, let's say, underneath this higher low. Or we could start to measure another volume weighted average price off of this low and say that's our worst case risk, and maybe just down at this point back below 117.5. I would be a little bit concerned about these biotechs going into next week, so just be aware of that as we're pretty close to that level. Let's talk about Tesla for a moment. I pointed out on the weekly time frame that on the weekly time frame, this past, the most recent, the weed sell-off, came down to the volume weighted average price from this 13 low, and it bounced almost perfectly from there. Now, if we look at a 30-minute time frame, we say, what's the next important level of potential resistance? If we take a look at the gap lower from this point right here, you can see we're right up against that. So if you bought into the dip on Tesla, remember that prior support tends to act as resistance. We have a declining 20, 50, 100, 200-day moving average. The volume is diminishing on this rally. Yes, the volume is, the volume weighted average price off this low, I think would be your absolute worst case stop if you have bought into it recently. But we're at a potential level of resistance. We only know resistance after the fact if it drops away from there. Instead, if it continues to rally, fine. Our job isn't to sell short just because we're at a potential level of resistance. Instead, we say, what's the most recent relevant higher low if you're a purchaser in this recently, since the event? What's the volume weighted average price since the event being right here? Let's talk about a couple other names that I've mentioned throughout the week on Twitter. IMAX was a nice one that's working well for us. And we didn't buy this one on the breakout, if you recall, where I'd mentioned the purchase price was above this level. And what we want to do is sell some into the strength on those new highs, similar to LYV, Live Nation. I had mentioned that we wanted to buy it. I had put the tweet out that we wanted to buy it right above this level right here. And that was where you want to buy it. Now, you could have made money, of course, buying the breakout, but the point is it had already moved 5% to that point. So we sold some into that level. I don't have any regret about selling some. That's part of my discipline. But right now, since the event, since it broke out, here's the volume weighted average price. So a stop, should be below that level. Talking about, let's see, we also had, Nike, when they gapped down on Kaepernick, I had pointed out the volume weighted average price since the most recent earnings report. And it touched it almost to the penny, and that's where we've seen the rally come from. I talk about these volume weighted average price levels every single day for subscribers to Alpha Trends. If you're interested, take a look. If not, have a good weekend. Wish the best of you in your trading.